Welcome to another earnings update here at Tropical Battery. So I'm joined by Alexander Melville, CEO of Tropical Battery. It's been a great year, great 9 months. So I'm happy to be joining you for this update. So we're gonna go through the reports. The results came out just this week. So Alexander will take us through the highlights of the report, and then we'll get into some Q&A. So feel free to ask us the questions that you have in the chat, and we'll get to them right at the end of the presentation. So let's just get started. Over to you.
Thanks so much, and really a pleasure to be here again. I think for my fourth interview, so very, very excited about that. And yes, the numbers were just released. Actually, yesterday afternoon they were posted. So I'm going to walk you through them. This was, the period was our third quarter. And in that third quarter, you saw some significant changes in the business. And those changes were really centered around that, 16 months ago, we were really just in Jamaica. And now we are in 3 countries, just 16 months later. And so I think that is very, very new, and a lot of people think of Tropical Battery as a 75-year-old, kind of Jamaican battery business. And I wanted to highlight particularly these 2 items here on the right, which are these 2 charts. I'll try and bring them up a little bit larger. So the first one really highlights that the profit for the quarter was 121 million. And that's compared to last year was 39. So that's a significant, like about 200% increase. And then of course, for the 9 months year to date, we're at about 220, which so for 9 months, 220 is our highest profit ever in 9 months. Actually, our highest profit for 12 months was about 197. So at 9 months, we're actually tracking above our highest profit for a full 12-month period. So we think, obviously we have 1 more quarter to go, and we think that that's going to be positive and add to this number. So very excited about that we should have a record year in terms of sales and profit. The other thing I thought was really interesting to highlight in the report is that where we actually get our sales from now. As I said to you, 16 months ago, this chart would have just said 100% Jamaica. And now it says, 55% of our revenue comes in from the United States of America, which is, great diversification, US dollar earnings, and has really significantly changed our business and also changed the cash flow and access to US dollars, everything. So I think that's really interesting to point out, highlight. Of course, also Dominican Republic is just getting going. This quarter was okay for them at 6%. And so literally, 61% of our business came from outside Jamaica and 39% from Jamaica. So a huge difference there. The other thing I would highlight is just some big picture numbers, which I think are important to highlight. The revenue for the quarter was 1.9 billion, or about 143% increase over about 780 million last year. The gross profit was up 600 to 623 million, 172% up on last year. This incredible, always one thing you always want to see in financials. You want to see your gross profit and your EBITDA growing faster than your sales, in my business experience. So we had a great quarter, and all of those metrics are really growing faster than sales, which is just beautiful. The only one growing faster than sales is expenses, and they are not, thank God. So and of course, EBITDA is 250 and net profits are 121. And our return on equity, when you annualize the quarter, is about 38%, which is extremely high. Usually anything out over 25%, 30% is great return on equity. So really happy how that second to last chart I want to highlight for you is operating profit by country. As you know, we took some a bridge loan facility to moving to the main market to get us to acquire the company in California, Rose Batteries. And so this operating profit really shows the just profitability of the business of the operations without any finance costs or without any depreciation. So even though they're 55% of our revenue, they're actually 65% of our operating profit for the quarter, for Q3 2024. And DR, which was 6% of our sales, is 14% of our operating profit, again highlighting, the strength and operating profitability of these two entities that are batting above their actual sales rate, which is very positive. I mean, Jamaica is not holding its own so well. Obviously, we are more of a commodity type, lower margin business, and have some overheads and stuff there. And we had a bunch of also one-time transaction costs that we couldn't actually put towards the transaction that Jamaica had to hug up, kind of lowering its operating profitability. So I thought that was really good to highlight those things. And last thing I would highlight in our quarter, which to me was again a record quarter, is two key operating metrics which are really important to understand in a business: an inventory turnover ratio and cash conversion cycle. And I mapped out the last 8 quarters, 1, 2, 3, 4, 5, 6, 7, 8, about the last 8 quarters here, sorry, 7, to show the trend, so you could actually see in Q1. I'm gonna make that a little bit smaller so you guys could see the headings. The blue bars are inventory turns, and the line, the kind of light blue line going across the screen, is the cash conversion cycle. And so on the left is the turns, the over here, and of course we turn the inventory 2 times in Q1 2023, then 1.9 and 2.5, 2.3 since the acquisition of Rose and the significant merging of inventory and companies. We are now turning our inventory 3.6 times in Q2 and 3.5 times in Q3 this quarter just end. So be able to turn your inventory more times per year gives you more efficiency, more, a lot of really good things happen. It shows you're utilizing your working capital much better. So we're really excited to see the change. And it's a gradual change of us improving it from 1.9 up to 2.54, and then of course now up to 3.5 times inventory turn. And a similar effect when you look at our cash conversion cycle. It peaked at about $175 days, and it's dropped as low as 85 now to 100. It means that it's taking us up to last quarter 109 days to convert our inventory to cash. And the smaller that number is, the better. Inventory turns you want higher, and cash conversion cycle you want lower. So the less number of days it takes you to convert it to cash. There's some companies who have like a negative cash conversion cycle, which I love that they pre-sell stuff before they deliver it. We still have to give credit, so we'll never have a negative cash conversion cycle, but we want it to be as low as possible. So just those are really the kind of operating matrix that I wanted to share, and some highlights about the business and really how we've changed the makeup of the business, on where we get our revenue, where we get our income, and really our big picture strategy continues to perform well as we grow into multiple and larger territories, which is part of our plan. And I think so far, knock on wood, we've been executing pretty well.
Yes, very well indeed. So the very first question that I want to ask you, right? So when we met in January or February, I think it was, you had just completed the acquisition.
Mm-hmm.
What has that process been like? So integrating Rose Batteries into the Tropical Group, what has that process been like?
Yeah, very, very insightful question. I think it has added a whole different level of expertise to the team, because they're really engineering. They have an engineering division and they manufacture. We don't manufacture anymore. And so they really have a talented engineering team in California, and actually a lot of their employees work remotely, all over the place from Colombia to different parts of America. And so that expertise around our table, it has really added a lot of value. So their senior team the CEO and the CFO, we make up a part of our strategy team. And so what we decided, our strategy team was just here in Jamaica, Tropical Battery at first. Now we have 2 members from California, Rose, 2 members from Dominican Republic who are really specialists and the CEO and COO in Dominican Republic who are experts in solar and renewable, and both MBA students and very, well-educated, smart. They know their space really well. And that, I think, along with 3 members from our Jamaica team, myself and my brother Daniel and Oliver Hill, would make up a 7-member strategy team. And that strategy team, because it has 2 people from Rose, 2 from DR, and 3 from Jamaica, we meet weekly and help to plan out a strategy that gets all 3 companies integrated. And so I just said that since that acquisition, we've been able to just really improve the size of our strategy team and brain power around the team and different skill sets, because their education and experience and specialty in the specialty battery, mission critical type battery business for hospital stuff, for train brakes, for tsunami warning systems that are dropped out in the ocean, those type of batteries, specialty batteries, that experience we didn't have. So that they bring that to the table, and similar, Dominican Republic brings their 12, 13 years experience in the solar business that is helping us, learn more and leverage their experiences to make a better, stronger group of companies.
So based on what you just said, does that change? Could we maybe be seeing a difference in maybe your total product offerings in a few years based on the expertise that comes from the different groups?
Yes, I believe so. That is part of the plan.
Okay. All right. So what can you do in terms of, so based on this acquisition that has taken place, no doubt I imagine there may be some costs associated with maybe even that process of integration that you're working towards, right? In the short term, have you been able to realize any efficiencies in terms of sharing of resources? So let's say some companies, for example, have like a shared services model. Have you been able to work out anything where maybe you're sharing suppliers or you're sharing systems? Has there been anything to that effect in the last few months?
Yes, we have a full list of 5 or 6 areas where we think there can be collaboration and more cost efficiencies across the group. None of them really deal with people, because we're not really about getting rid of people. It's all about just figuring out how we can use technology to help us grow faster, and maybe we add less people. But that we have a list of 4 or 5 of them. I don't want to share all of them with you, but those,
share what you can.
Those items are discussed every week in our strategy meetings, and I think one of the big ones obviously is IT. We're looking at changing our ERP system here to one similar to the one that's run in California, here in the Dominican Republic. So we're all looking at moving on to the same accounting platform. That's one, and I think that is going to produce huge savings again in the future. It's not happening. That one's not happening today, but we've already signed up and we're in the process of implementing. But it will take 6 to 9 months to implement that transition. There's some low-hanging fruit where we're sharing certain IT resources in terms of human, what we call talent management department kind of thing, people, and there's also a lot of efficiencies to be gained in purchasing. Although our purchasing doesn't overlap a lot, which I think is a good thing, because it allows us then to get new products that they're not doing over there. But we do have a lot of synergies in certain lithium iron phosphate batteries that we are consolidating purchasing on. That is going to be lower cost for all of us.
Okay, because I was actually wondering that. Okay, I was wondering if it is that you could, for example, if you're able to combine purchasing power, if that would lead to maybe opportunities in terms of savings.
Yes, you're correct. That's exactly what I'm speaking about, especially in the lithium iron phosphate area of batteries.
Okay. All right, so we do see some questions coming in the chat. We just have a couple of more questions that I wanted to ask you first, and then we'll get right to those. So you mentioned having to take on debt to be able to complete the acquisition. So we know that your finance cost has essentially increased, and that is actually what's preventing you from realizing even more profits, right? So what's the plan for the fundraise? How much can you tell us now? Where is it in terms of progress?
Yeah, great question. We paid probably about $150 million of finance costs in that quarter. So if you and normally, prior to this acquisition, our finance costs are maybe 20 or 30 million a quarter. So there's an extra 120 million of finance costs in there that if you add that back to the 120 million of profit, we'd be at 240 million of profit for the quarter. So, and I think over time we're going to get there. We're figuring out the best strategy, but we know we believe on our board and advisors and everybody, it's moving to the main market, and moving to that main market will allow us to raise some liquidity that will pay down, we think, probably more than half of the debt associated with the acquisition. And then that once that is paid down, all those, that extra profit will just fall straight to the bottom line. So we're very excited about moving to the main market. Only I think 6 or 7 companies have gone from junior market to main market, and we're actually doing it early, 4 or 5 years in of just after listing. It's incredible to know that when we went public, our revenue for the year was $1.8 billion in 2020. We listed in September 29th, 2020, and our revenue was $1.8 billion that fiscal year. This quarter, we did $1.9 billion in the quarter in just a single 3-month period, 4.5 years later after listing. So we think that's a great achievement. We've shown incredible growth rate, and it's flowing down to the bottom line, and it will even flow down more to the bottom line as we de-lever or pay off that kind of bridge loan financing.
Okay. So the move to the main market will come first, and then you'll do the raise?
I don't know exactly the timing of it, but I know that we are graduating because we are outgrown some of the requirements, the capital requirements of the junior market.
Okay.
And so when exactly that timing is, I believe it'll be before the end of this year. I'm hoping for September. We should have it done by the end of September, early October.
So any clarity around what type of raise it may be? Are you sure at this point?
We have already refinanced part of the acquisition debt down, which was quite expensive, to a much lower, 35% lower interest cost rate in last month. So you'll start to see some of that on half of the debt coming down. The other half, which was more like preference shares, is also pretty expensive debt. And so we will, as you can see in our interest cost, but I don't have the exact. It's through the main market. It's either going to be either long-term facility or some type of equity. It's going to be some type of equity injection, and whether that's from an APO or a third party or someone or ourselves or right issues or something, we're figuring out the best way to do that. Well, all we know is we have a lead arranger in Cygnus who's very excited about doing this because we think it's very attractive. Our growth, our profitability, everything is moving in the right direction. So
the final question I'll ask you regarding that, the target is to at least cut about half of your finance costs, you said?
Yeah.
So what would that look like?
We're going to raise probably about $10 million US.
Okay.
Around their ballpark. And I think that will significantly put a lot of money to the bottom line, which will create value for shareholders.
Okay, awesome. All right, so we have quite a few questions that we have bookmarked here. So let me get through a few of them. So Omar is asking, how much are you looking to raise? I think you just got that question answered, Omar. So 10 million US is the target. Next question. Shelly, good to see you. I want to hear more on the US market and future plans. Thank you for mentioning that, Shelly. What can you tell us about future plans for US operations?
Yeah, very insightful question and lots of value to be gained from that. As you can see, it is more than 50% of our revenue. It's more than 65% of our operating profit last quarter. So it's a very important business to Tropical Battery. So first off, it's super important to us. We take it very, very seriously. We did a lot of due diligence to buy that business, and we love the team that's there. And it's, when you buy something, there's still, even as much due diligence as you do, there's still some risk in it, that there was some. So I can say now, 7 months in, from January, we purchased it, end of January. So 6-7 months in, we are very happy with, what we bought was exactly what we thought we were going to get, which was a great business that's very profitable and has great growth potential. That growth potential comes through organic growth in their business, and also through similar size roll-up acquisitions that we plan to do in probably 2025 and 2026. And that is really just a strategy. It's just to do organic growth. We're looking at new, not just in the current products that we do, we're looking at different battery chemistries. And so we're trying to find safer chemistries than lithium iron phosphate. And when I say we're not trying to find it, we're partnering with other manufacturers, other suppliers of cells and that technology that we can then put together and customize and sell to our customers, because they're always looking, what's the next generation? There's lead acid, there's lithium iron phosphate, there's nickel cadmium, there's different chemistries that make up each individual battery cell. And those chemistries have different characteristics, and those characteristics can be, more flammable, less flammable, more longer life, less, or also hard to get out of the ground and don't recycle that well, and some are not as environmentally friendly as other ones. So we're exploring partnerships to do that and make sure that we're always using the latest chemistry that is best and most environmentally friendly, and of course very appealing to our customers. Again, the business is based in Silicon Valley. So Silicon Valley, San Jose, Silicon Valley is made up of San Jose, Palo Alto, Mountain View, Sunnyvale, and it is just an incredibly tech-friendly and fast-paced, place to do business. And so we get access to a lot of cutting-edge, what's happening in the different industries before a lot of other people, because there's just happening right there, right where your office is. So that's our plans to grow through strategic acquisitions and organic, and then also by finding new chemistries that are in demand and better quality.
So you're saying we may see some further acquisitions 25, 26?
Yes.
Okay.
Yeah.
All right. So Terence says congratulations on what seems to be a successful acquisition. I think we all agree that it was. My concern surrounds the level of related party balances, particularly amounts due from Choco, Caribbean, and Diverse Properties Limited.
Excellent question. I think the biggest one really there is Diverse Properties, and they have a plan. They're being charged interest, so our interest income that you see on the financial statements, part of that is interest income. So it's not like an interest-free loan. It's just like they had the money in the bank and they're earning interest on it. So Tropical Battery shareholders are getting a return on that related party loan, because we charge interest on it first off, and it has to go through our risk and whatever committee, and everybody has to declare whatever interest. So one, however, I still think it's too high, even though Tropical Battery shareholders are earning interest on it, and Diverse Properties is in the selling, is liquidating some of its real estate to pay down that facility. And so I believe within the next, I think it's going to be 3 months, but let's say within the next 6 months, you're going to see that balance really start to come down, which will bringing back cash for Tropical Battery. And however, we already have, as $420 million of cash on the balance sheet today. So it's not like we're in need of a lot of cash right now. So having that related party loan and interest earning, I think, is a good thing. The second thing I'd say about it, but I do want that cash in because we can use that then to either pay dividends or pay down some of other facilities that we're working on to drive, increase shareholder value for Tropical Battery shareholders.
So that was certainly going to be one of my questions. With this growth in net profits, will there be a plan to increase the dividend payout? You haven't announced a dividend for 2024 as yet. Can we expect a higher dividend, maybe a 50% increase, 100% increase in the dividend payment?
Yes, valuable question. We are certainly looking to pay dividends in 2024. As you know, when we started, we paid 1 cent, 2, and then 4. So we've doubled every year since we've been listed. I wanted to double again this year, but my board is reminding me to be conservative. Again, we have $400 million of cash. So if we doubled our dividend, it would be about $100 million payout. So I don't see it put us in that great a jeopardy of any issues. But we do have a board meeting coming up. It is on the table for discussion. And yes, I think we're going to pay a dividend this calendar year. I just don't know the amount. If we paid 4 cents last year, I'm pretty sure hopefully we'll at least do that and above.
And then some.
Yeah.
Okay.
So
fair enough. Part 2 of Terence's question, what were the terms of these arrangements? I think you kind of alluded to that already. There's approximately $800 million worth of related party balances, which could be used to reduce the debt. So I think that question was answered, Terence. So hopefully you're satisfied with the response. Shelley says, ask about your plans to move to the main market, all the benefits you see, etc.
Yeah, I think the benefits to me are greater liquidity. Junior market stocks, not a lot of them, trade very buoyantly and it's kind of thin volume from time to time. I believe that, we want to be a real, in 3 to 5 years, we want to be like a real size business. Yes, we're going to do probably $5.7 billion this year in revenue, but I want to be doing 10 or 20 and profits of $1 billion, not 200 million or 300 million in profit. We need to be, and that's a main market business, and we want greater liquidity. You want to be able to get, so of course, pension funds are also more attracted to companies that are main market listed. It's just better for shareholders. On the path that we've been growing from 1.8 billion to 5.7 billion this year, we need to be on the main market, and that's our just long-term plan. We want to build a really large energy storage and energy generation solar business and mission critical like application batteries that are very specialty, that are made with computer chips on them and made for real specialty. I call them like life-saving stuff. They really do. Like the train brakes, if those brakes, the battery in there needs to work. You need to tsunami warning systems. Like if those batteries fail, it threatens lives. But when the warning goes off, so we make a lot of that type of stuff that I think I love it because it's better margin, because it's specialty, it's custom, and B, it's really high quality. And so I think that, I don't know if I answered your question, I think so.
Yeah. I think what we saw with another company that migrated to the main market earlier this year, it's something that's almost like the junior market is a starting point. But I think most of those CEOs would agree that they ultimately see themselves going to the main market. So you've just gotten there 4 years in, right? So
I also sit on the board of Eppley, which was started as a junior market company. They're one of the 7 companies, and I joined the board from day one, 11 years ago. We did junior market, and then when they went to the main market, they had much more liquidity, more opportunities, and you see their stock price, went significantly up from junior market to main market. I think if you are a growth mindset, and our business is growth mindset, our team is an international team, and so main market is just where you need to be.
Global business.
Eventually, as I said, we're going to list in the US, and we have a team and a strategy and coaches, hired in California, in the US, that we meet quarterly on what is our 3 to 5 year plan. How do we list on NASDAQ? What's the entity? And we're creating an entity already where there's a plan. There's a
Yeah.
plan, it's a 3-year plan to list, but that will create even greater liquidity.
Yeah. Sounds very interesting. We have a lot to talk about.
Yeah.
The Anthony says the senior secured bridge notes from the Q2 report are not present in the Q3 report. How was that note paid off? Was it paid off?
Yes, yes. That was paid
Or,
off.
that was a refinancing that you
Yes,
mentioned?
yeah. And bank CIBC gave us a much better note, and we paid it out with a lower cost debt. As again, like 35% lower cost debt. So just last month, that's why they're not present in Q3.
Okay. Awesome. All right, Jerome says, why not access cheaper long-term debt abroad via Rose batteries to cover the cost of acquisition? Why not borrow the money overseas instead of?
Yeah, very good question. We tried some of that. However, banks over there were a little, I want to say, skeptical of foreign ownership. And Rose is one of the things I love about the business. It's a high producing cash business. However, it is a low asset business as well. So it doesn't own a bunch of real estate and a bunch of equipment. It gets its customers to buy that equipment and stuff like that. So I think it was just harder for us to get it, and we had a certain time frame that we had to close by because there was 4 or 5 companies bidding to buy this 60-year-old Silicon Valley battery business, 62 years old now, 61 or 62 years old. And so based on those time constraints, the where we could access the financing was here in Jamaica at the quickest time. We knew it was expensive, and we knew we were going to figure out a way to lower that cost over time, which is what we're trying to do. I believe, So we're saving. We have had discussions with our bankers in the US, which is California Bank and Trust, and they're willing to do some stuff for financing for us now, having understood who we are and get to know your customer.
Already taken on the risk,
Yeah,
so
yeah,
it's less risk for them.
Yeah, and they now know that we're not some I don't know, small little Jamaican company, which we are maybe, but relatively. But I think we built a good relationship. So they're willing. They've even said any of the acquisitions we have upcoming, they're willing to finance those for us at low costs in the US against what we're buying.
So Jerome is asking, we'll try to get as many questions as we can in, but we may only be able to take 2 more.
Yes, I do have 11 o'clock.
Yes. So Jerome is asking, what are your thoughts on the dilutive effect of APOs, which has led all the companies that have done them to being down significantly in stock price? What will you do to make Tropical buck that trend?
So how we will buck that trend is we're going to produce higher earnings per share. And the ones that do an APO have not produced higher earnings per share. So if I have to dilute 20%, and my shares are diluted, so we issue 20% more shares, but I increase my earnings per share by 50%, which is what we have been doing. The earnings per share gives you a higher stock price if you just trade at similar multiples. So if you're trading at 15 or 20 times earnings, if you have higher earnings per share, your stock price should continue to go up. And I think, secondly to that, most companies that have done an APO, or some companies that have done an APO, have not done. I don't know, it's a tricky question. I think if we do one, and as we have planned to, you will see the way we approach it. I don't think will be how other companies have approached it. We're only doing it because we're going to the main market, and a lot of companies that have done it have not done it in the time of going to the main market. They may have done it in the junior market and stayed on the junior market. We're doing it as a process of moving to the main market, and that move to the main market makes us more attractive to larger investors, pension funds, persons, more transparency. We're adding a new board member, independent board member from an accounting firm here. We are committed to, transparency, growth, dividends, you name it. So I think that commitment to those things will drive our stock price higher, hands down.
So, I mean, the rate of growth that you have is very different from some of the companies that we've seen doing APO. So I do agree with that, because, as you said, if if your EPS continues to grow, then there is, the stock price is
Usually, yeah, follow.
is ultimately up to the investors, but of course that'd be a compelling factor for sure. All right, so we are out of time, unfortunately.
Yeah.
So I'll allow you to say any final remarks that you wanted to say before we close out.
Yeah, I appreciate it, and I'm sorry that we got started a little late, which was my fault, and that I have this other 11 o'clock. But I do, in closing, just really want to thank you for having me again and doing this call. Always love to sit down and chat. And what I would highlight again in closing is we are committed. We put a team together that is in 3 different countries that sit down every week and we plan how we are going to grow this business profitably. And based on, you take a look at our results, take a look at the 9 months results and see what we're achieving and look what we've achieved over the last 4 years. And I think we are committed to paying dividends. We're committed to growth. We're committed to transparency. And I think that should lead to, a bright future and a good outlook. So
Okay.
I'll leave it there.
Thank you so much, Alexander. Thank you, everyone, for watching. Be sure to like the video. If there are any questions that we missed, we'll try to host another brief interview. Maybe
Yes.
Alexander will join us for Market Money again and we'll get them answered. So feel free to post them. Thanks again for watching. We'll see you soon.
Yeah. Thank you.